how to finance measures needed to achieve global net zero carbon emissions is one of the most intensely debated aspects of the climate debate. How can state funds be leveraged to maximise private capital investment for the energy transition? The timeline for carbon neutrality set out in the Paris Agreement does not account for the higher burden of the adaptation on less developed energy systems. Industrialised nations must ramp up support for developing regions to close the financing gap on sustainable development.
And welcome back, everybody, to this final panel here in the Weltsaal, besides the closing ceremony, of course, on finance and how we get to net zero. And we heard it there. This is one of the most hotly debated topics when we talk about the journey to boosting renewables and getting to net zero. IRENA, the International Renewable Energy Agency's most recent World Energy Transition Outlook, estimates that success in bringing CO2 emissions to net zero by 2050 depends on scaling up investment by at least 30% compared to where we are now. Possibly you have even higher discrepancies. But persistent barriers remain, whatever estimates you're using, particularly in connection with smaller projects, which account for nearly half of all renewable energy undertakings. So how do we address these barriers and achieve a major realignment of capital flows? That is our central question in this panel today. How can state funds be effectively used to leverage private capital investment for construction of renewables-based energy grids? And developing countries, many of them already bearing a very heavy debt burden, require capital not only for mitigation, but also, of course, for far-reaching adaptation. How can projects that contribute to resilience and sustainability be structured to attract investors who, of course, are looking for returns? And finally, what is the role of blended finance in closing the SDG financing gap? Those are some of the topics that we're going to be talking about here on this panel, and we have eminent speakers with us to address them. I will keep the introductions brief, as always, in order to maximize our time for discussion. And I begin with Vice Minister for International Affairs at Japan's Ministry of Economy, Trade and Industry, MITI. He is Naoshi Hirose, and he has had a long career, including leading positions in energy policy. It's also a pleasure to welcome, joining us, Aminat Shauna is Minister of Environment, Climate Change and Technology from the Republic of Maldives. Great to have you with us. Thank you so much. Also a pleasure to welcome Kandikupa Srikant. He is Chairman and Managing Director of the Power Grid Corporation of India, with 34 years of experience in the power sector in the area of long-term financial planning. Also very pleased to welcome Suhasil Nazara, Vice Minister of Finance for the Republic of Indonesia. Online, Rian Marie Thomas joins us. She is Chief Executive of the Green Finance Institute, backed by the UK government and the City of London Corporation. And finally, a pleasure to welcome Werner Hoyer. He is serving his second term as president of the European Investment Bank, and under his leadership, the bank has also consolidated its position as a leading multilateral provider of climate finance worldwide. And we begin, in fact, with a short keynote from you, Dr. Hoyer. And I'll just note in handing over that the EIB made waves by announcing already 3 years ago that it would end support for fossil fuel projects and mobilize 1 trillion euros for climate and environment finance in the decade to 2030. So please, take it away.
Well, thank you very much for this very warm welcome, and it's a pleasure to be with such distinguished colleagues here on the stage, talking about an issue that is so incredibly important. You should know that the EIB, the EU bank, is the largest multilateral bank in the world, and this is particularly true when it comes to green finance. We have been the climate bank of the EU for a long time, but what few know, since you referred to the mobilization of private funds at the leverage, we issued the first green bonds ever in 2007. And at that time, that was considered a lunatic idea. And this lunatic idea has now mobilized probably close to 1,000 billion euros on the capital markets in the support of the green transition. We invested early into offshore wind farms, nowadays floating wind farms, which are particularly effective, battery technologies, green hydrogen projects. And in 2019, we made that quantum leap forward by adopting an ambitious plan to become the EU's climate bank. And that was then also the day when we said we move out of the financing of fossil fuel products. As part of this, we set ourselves clear targets. 50% of our lending should go into environmentally clean climate projects from 2025 onwards, something that we have achieved already last year, so 4 years ahead of schedule. We also committed to align all our lending to the Paris goals, which means that we no longer invest in activities that do significant harm, that's the terminology, do significant harm to the environment. We have already implemented this as well already, the first MDB, by the way, and we launched an ambitious adaptation plan to address the unfortunately often forgotten but crucially important component in the fight against climate change, climate adaptation. Mm-hmm. So when it comes to our work on the ground, the EIB is very much an engineering-driven institution. You may find as many engineers with us as you will find bankers in the bank's offices in Luxembourg and elsewhere. And the idea behind it is very simple. With our financing, we want to promote innovation as well as technology transfer. We always think innovation, climate, and development together. They belong into one box and not in three separate boxes. I'm convinced that in the end, we will only be successful in our fight against climate change if we manage to combine these three elements. And if we mobilize others, most notably the private sector, to do so as well. In the last 15 years, every acute crisis has become a reason to put climate protection on the back burner, while the window of opportunity for timely decarbonation has become smaller and smaller. And we are right now exactly in this situation where some people are hiding behind the virus or behind the situation in Ukraine when it comes to climate action. So it's absolutely critical that does not happen again. And while I see that some people take the opportunity, I believe they will remain lonely voices. Because we are seeing more clearly than ever what our reliance on fossil fuel means, not just for the climate challenge, but also to shift our strategic dependency on others. The only way to reduce this is to push ahead with the green transition. And as part of Team Europe, where we cooperate, of course, particularly closely with the European Commission, we are keen to work with partners around the globe. We believe that the solution of the climate issue can never be national or regional or local, nor can it be regional in Europe. It must be seen as a global challenge. And this is why we need to cooperate on a global scale to promote innovative, sustainable development solutions worldwide. So the challenges are global, so must be the solution. I'm looking forward to a good discussion.
Thank you very much, as we all are. And I would like to stay, normally I would now go to the countries, but I think I'd like to stay with the big picture view for a moment and then come to the countries, if that works for everybody. And as mentioned, significant barriers do still impede the flow of capital into renewable solutions, not least a lack of knowledge on the mechanics of green finance. So I'd like to ask both Ms. Thomas and Mr. Srikanth to please talk a little bit about the barriers that you're seeing in practice and tell us how the organizations that you represent are contributing to potential solutions. And I'll ask you to weigh in again, Mr. Hoyer, after the other two have spoken to add if you see additional points. And I'll begin with Ms. Thomas, if I may.
Well, thank you very much. So at the Green Finance Institute, identifying the barriers to the deployment of capital towards real economy solutions and then co-developing the financial interventions to overcome those barriers with industry experts, finance providers, and political representatives is our very purpose. So in order for private finance to move, it clearly needs to find commercial opportunities. And we, as former bankers, can play a valuable role. We're mostly, at this point, financed by philanthropic donors, and so we're not constrained by the short-term profitability targets that we would have if we were still working in large commercial organizations. And so that enables us to do the painstaking bottom-up work of identifying those very granular barriers that are stopping the transactions from happening. So in particular, we're focusing on financing the energy efficiency of buildings and the decarbonisation of road transport. They're projects that we've started in the UK, but we're keen to expand across the continent of Europe. And we're also developing nature-based solutions and hosting the Secretariat function for the Task Force on Nature-related Financial Disclosures. We're developing a financial instrument to channel capital towards climate-smart infrastructure in middle-income countries. And if I may just focus on that for a second, my colleague in Cape Town has been working very closely with the South African banks and local investors to develop a green finance guarantee facility. And that's been structured to respond to their requests for a de-risking facility that enables them, the local banks, to finance climate infrastructure projects using local domestic pension and institutional funds. And the barrier we identified with them was that these local pools of capital need to invest in investment grade securities, such as government bonds, for example. And that often exempts them from investing in much needed energy, waste, and water infrastructure in response to climate change. So our work on the facility to address this issue, it is underway, and we're also doing the feasibility studies to identify other jurisdictions where it could also be a possible solution. Clearly, the barriers to investment vary by jurisdiction, by industry sector, but I think the point that I'm trying to get across is it requires granular and painstaking work to identify them, and then, as we've just heard, a huge amount of collaboration, cross-sector, cross-geography, to find the right solutions.
May I just ask one follow-up, and it relates to something that I often hear when I'm talking to people in the financial area, namely that there is sometimes a lack of capacity to develop bankable project proposals. And is that something you're seeing in your work? And is it also something that you are addressing, or how do you think it can best be dealt with? And of course, it gets back to the point I made at the outset that in fact, there are often barriers in connection with smaller projects, including many that relate to renewables.
I'll make 2 points, if I may, very quickly. This point about bankable projects is quite often because those projects require equity and not bank credit. And so quite often we find that developers are looking in the wrong place at the wrong types of finance in order to get their projects going. That's not always the case, but that is quite often the case when we hear this lack of bankability. The second point I'd like to make, and this is purely anecdotal, the work that we've been doing in South Africa over the last year and a half with the banks, we have uncovered over £1 billion worth of shovel-ready climate-smart infrastructure projects that the banks would like to underwrite, but they can't distribute those securities to their local domestic pension and institutional investors because they're not investment grade. So certainly in a country like South Africa, which obviously has a huge requirement to decarbonize, we're finding that there are projects, but we actually need to find the right de-risking mechanisms, which is where working with an organization like EIB and other multilateral development banks could provide part of the solution to help crowd in that private capital.
Thank you very much. Let me go to Mr. Srikanth now.
Thank you. If you look at the ESG bond market, last year there was about 853 billion of issuances, and roughly 50% of them were green bonds. And if we look at India, from where I come from, Indian utilities and renewable project companies, developers, they have raised about 9.4 billion last year from the green bond market. And the Indian government has also announced in the budget that the sovereign will issue a green bond and to raise funds for the climate benign projects. Now, I am from a utility, and as an issuer, what do we see as the barriers to these markets? First and foremost, there are different taxonomies. I think EU and EIB have done a great job in giving a standard, but then there are many different, what is a green bond or what is a green financing? So the first question is that, and how do we attract that pool of capital? And second is that there is not much of an incentive for the issuers to go for the green bond because the pricing differential is not that much. Unless you are a very repeated issuer or so, and it's very upfront, it is not. So the issuers, particularly the small ones, will feel that, okay, what is the point doing the additional compliances and all? Do I get any reduction in the cost? And finally, I think there is no requirement on the part of the investors to allocate a certain amount of their capital to these projects. I think that is one of the reasons, perhaps, if there is a change or there is a mandatory that, so for example, there is a talk of green asset ratio. So I think if you have mandate such a thing that at least a minimum percentage, like a renewable purchase obligation. So if some such thing is there, then there is a greater flow of funds to these green projects.
So, Werner Hoyer, let me ask you to add or respond to what we've just heard, and then we'll move on to the countries.
Well, I can fully subscribe what I've just heard. The key thing is that we, as a multilateral bank, which is endowed only very, very little by the shareholders of the bank, these are the 27 member states of the European Union who are quite clumsy when it comes to paying in cash into the bank, but they give a guarantee, a callable capital guarantee. Beyond that, we need to get the money from the capital markets. We issue bonds every year between 70 and 100 billion euros, and we must place them on the markets. That requires the trust of the investors. That's our main capital, the trust of the investors. And that means the investors must be sure that, for instance, what is labeled green is green. And therefore, we found out pretty swiftly after 2007, when we issued the first green bonds, that the investors would look very closely at what's in the package. Is it really green, or is it just the cheating that's going on? So green cheating was the name of the game, or greenwashing, to put it more mildly. And that's what triggered then the necessity to establish standards, green bond standards, agreed in OECD, in the European Union and other places, and which are now practically world practice. And this is key because now we go beyond green, it's also ESG standards in general. These must be observed. That leads now to a discussion about the so-called taxonomy, which I think is a great idea, as long as it doesn't develop into a bureaucratic monster. But the basic idea is correct, give reassurances to the investors which we need. We will never be able to finance our Paris goals or the SDGs with state budgets money alone. We need the private sector for this.
Let me just ask you to say another word about the taxonomy, because we have an audience question on that point, and I was waiting to bring it in until somebody mentioned this rather impenetrable term, I must say. Taxonomy, for many people, is, what are they talking about? But many people view it as a real watershed moment. So just tell us 3 sentences about why that is or is not the case.
The first reaction in our board when I mentioned the word taxonomy, which came from the European Commission, was that said, why taxes? And then this, of course, the killer argument. No, the good Greek word taxes, order, has a very good idea behind this. We need to bring order into this market. And that I think is perfectly okay. But you need to have reassurances for the investors. And that I think some of us have learned the hard way, because if you have 1 or 2 or 3 experiences with green cheating, then we all have a problem in placing our bonds and raising the capital that we need. I mean, we have a balance sheet of something like $700 billion, and the capital injection is so small that we just cannot risk to lose the momentum or the trust of our investors. This is why we then also, to come back to another issue that you have raised, the development of projects, making projects bankable. This is normally not something a commercial bank would see as at the center of their activities. For us, it is. This is why we are an engineering bank. We get political objectives. We are an instrument of policies of the European Union. Energy policies, foreign policies, development policies. So we must be put into state to be able to help to develop projects and then to make them bankable. That can be by risk sharing, that can be by quality controls, and this is why I'm sometimes surrounded only by engineers and life science experts, and that's very healthy.
Thank you very much. Let's very quickly get our audience poll up and running. If I may ask our technical team to please give that to us on screen. Here it is. And the question reads as this: what are the chances that framework measures such as the EU taxonomy will substantially increase the impact that sustainable investments have on climate mitigation? So essentially, does this offer a potential solution to greenwashing and the problem that is facing so many investors of trying to figure out whether a so-called green instrument truly is respecting ESG factors? So please vote on that. We're going to come back to it in a minute. I would now like to move on to hear from the countries. And for our three country representatives on the panel, the question to you would be, based on your country's experience, what are some of the best practices in how state funds can be effectively deployed to maximize private capital investment in the buildup of renewables-based energy grids, for example? And so clearly this is getting to that de-risking and also blended finance that we were talking about. And I think I'm going to go to the Maldives first, if I may, because I think all of us are very well aware that you face a particularly critical situation in your land.
Thank you. It's a pleasure to be here. And the Maldives, I think most of the people would know as a holiday destination, but we're a country, like you said, 1,200 islands. Most of the islands are just about a meter above sea level. The reports that are coming out of IPCC is alarming, and our islands are eroding. We are running out of fresh water. So for us, climate mitigation is as important as adaptation. We see investments in renewable energy as part of our adaptation plans. We are a small island developing state, but we also have a growing demand for energy use as well. And we almost entirely depend on imported fossil fuels in meeting our energy needs. We spend about $58 million a year on electricity subsidies, and we spend about $500 million on importing fossil fuel as well. So for us, we see there clearly is a business case to shift to renewables, in addition to the climate benefits of it as well. The Maldives announced to become a carbon neutral country in 2009. And today, since then until today, we have installed about 40 megawatts of renewable energy throughout the country. And in 2 years, this will increase to 60 plus as well. And our first PPA was signed in 2011 to 25 cents. And just yesterday, we signed another PPA to just 9.8 cents per kilowatt hour renewable energy. The challenges for us in securing energy security is enormous. So upfront investments are needed for us to transition to green energy. But despite our challenges, despite our climate challenges and adaptation challenges as well, we do have a target to reach net zero by 2030. And several efforts are being made towards utilizing available renewable energy sources to generate electricity in our country. We have sunshine in abundance. So we want to transition our economy to one based on sunshine rather than fossil fuels. And we have the presence of EIB, ADB, and World Bank. And we are using our government funds to accelerate investments in renewable energy by investing in things like home solar programs as well. So how can governments facilitate this and mobilize funds? By combining through private sector, we need to invest in grid distribution networks. We are investing in battery energy storage systems. We are also investing in energy management systems in a way that renewable energy can be incorporated into the system. So in the Maldives, the way the private sector investments is structured investment framework, which blankets investors from any long and short-term risks in doing business in the Maldives. So the government will continue the efforts to facilitate investors through supportive policies and incentives as well. So finance is really the key to realize our ambition towards a cleaner and more sustainable energy sector to ensure energy security as well as reducing our emissions.
Thank you very much, Minister Shauna. Let me go now to Vice Minister Hirose to talk about the perspective from Japan.
Well, thank you very much. And I think it's no secret that global challenges need global actions and global coordination. And Japan is fully committed to maximize, the amount of renewable energy to be used. And for investment to flow, I think definitely there is a need for good coordination between the public sector and the private sector. And I think, the key words will be probably to cope with the uncertainty and raise, the level of predictability, I think is the key. So, for example, if we are working in the Asian region, including Japan, how to introduce renewable energy, there are kind of specific conditions or constraints to introduce wind power or solar energy because of the specific geographical or methodological conditions. And so, we think, that through innovation, we can overcome that. So here I think there's a role for government money working as a catalyst for promoting private investment and promoting innovation. So that's the reason why the Japanese government has established a green innovation fund amounting to 2 trillion yen, which is to assist specific projects by the private sector over the next 10 years with a specific commitment for target date, and which will assist from the R&D phase to demonstration projects and to the social implementation. So, for example, a classical example would be actually the floating offshore wind power, which is a promising technology to be used in areas where there's no benefit of shallow waters, for example. Now, in the phase of the commercialization, still, I think there would be instances where the demand for finance is increasing, but there is still risk for single companies to invest. And so here we are in the process of discussing with the financial sector about some kind of risk-sharing scheme, where the financial sector or the companies, who have done the R&D or who would like to use the technology can cooperate together to promote the financing. So that's on the R&D side. Now, in terms of the grid, in Japan, we have not seen as much as investment in investing in interregional transmission lines as we have expected. And one of the reasons we observed was that in our previous system, the cost of establishing this grid was borne on both ends of the transmission line, which means that those areas who have a high potential for renewable energy had to bear the high cost. So there was a kind of a chicken and egg problem. Mm-hmm. Now, we changed our legislation 2 years ago, and now we are in the process of putting together a kind of master plan, taking into account the future potential of renewable energy. And then we establish a system, that the cost of establishing the grid will be borne, by Japan as a whole. And also we have introduced the kind of revenue cap system, where the pricing will take into account the cost, and also a system that can incentivize cost reduction, where thereby it could create incentives and predictability for the private sector to invest. So this is a kind of model that we are embarking on right now, working together the public sector and private sector, including government funding for R&Ds.
Thank you very much. And let me go to Vice Minister Nazara also for a response on the same point.
I think the first thing that the government must do is to show commitments from the public funds. And from the spending point of view, for a country like Indonesia, it includes the reduction of the fossil-based subsidy. And we've been trying to do that in the last 5 years. But of course, whenever the international oil price is at this level, it's becoming more and more difficult for countries like Indonesia. But does not stop us from having the big picture, the right commitment for the subsidy reduction. On the other thing is that the government must show the commitment. In Indonesia, we do what we call the climate budget tagging for the public funds. So for every single ministry in Indonesia, we are asking them to show which part of your budget that you allocate for the mitigation and adaptation. And in the last 5 years as well, we found out that it's only about 34% of what Indonesia actually needs that can be allocated by the public funds, by the state budget. So we need to encourage the private participation, as you said earlier. Now, the government must also show this not only from the spending side but also the financing side. Indonesia, EIB is the first green. Indonesia is the first green sukuk. We issued the first green. We combined green and sukuk bonds for the first time in the world, and that was a debut that was back in, I think, 2018, and that was received well. That the Islamic bonds is very compatible with green financing, and we've been the green sukuk issuance. We've been the issuer of the green sukuk, regular issuance for the green sukuk for I think it's already 5 years now. So it is an underlying green. And of course, that will relate to the taxonomy of the green. And European has one. Indonesia has just announced one. Last January, announced by President Joko Widodo, our first green taxonomy for Indonesia. And soon this will need to be international comparison, international compatibility. What does it mean? But by the way, I found that taxonomy and taxes are very amusing. So that I was probably going to steal that story to Indonesia. But yet, the next function of the government is to provide platform. For a country like Indonesia, it's very important to provide platform not only for the public funds to become catalysts, but public funds that can catalyst and invite private participation. We are trying now to establish what we call our country platform, the energy transition mechanism. We launched this with the Asian Development Bank back in Glasgow last November. It is going to be a platform that combines the carbon reduction facility and the renewable energy facility. Those two. It is very important not only talking about the green, despite the fact we know that is the objective, that is the goal, but also for a country like Indonesia, where 70% of our electricity are coming from coal power plant, it's very important to talk about the transition on how to go there. We cannot just say that coal, you close and shut down. It has to be some transition. This is the platform that is needed for the transition of the energy. Including building the green. Thank you.
Thank you very much. And since you brought the taxonomy up again, I'm going to just get our technical team to please unveil the results of the poll that we took to see how everybody responded to that. Can we get that up on the screen? So 57% say it is somewhat likely that framework measures like the taxonomy will substantially increase the impact that sustainable investments will have on climate mitigation. And 35% see it as very likely. So that's a very large majority that considers that this could be a good initiative. And with that, I'd like to go back, if I may, to Ms. Thomas and ask for your take on this and whether you think that we finally are moving toward more comparability and accountability when it comes to claims about ESG, green, sustainability, whatever label you put on it? Do you think we are starting to go in that direction that is so critical to win the trust of investors?
Yes, I do. And your earlier points about greenwashing, I think, are absolutely key. Lawrence Tubiano, who's one of the key architects of the Paris Agreement, of course, she wrote last month that greenwashing is the new climate denial. But it's even more dangerous, in fact, and even more insidious than climate denial, because without appropriate accountability rules, it's harder to identify. And so these types of warnings really are eliciting the appropriate response from the regulators, the rules and standard setters, and the policymakers to accelerate the disclosures and the standards that we're going to need so that there can be accountability and we can tackle the issue. Robust disclosure is our key weapon in battling this scourge of greenwashing. So I think we certainly welcome the announcement of the International Sustainability Standards Board that was made at Glasgow COP, the introduction of the SFDR regulations in Europe, the climate disclosure proposal from the SEC last week, and indeed the mandatory TCFD disclosures that are being introduced in the UK next month. And these are all really important developments, but they're going to take time before they're fully and robustly adopted. And so I would say, in the meantime, let us not use this greenwashing accusation to stamp on the green shoots of progress. Investors who clearly themselves have to adhere to the highest standards of integrity have an absolutely critical role to play in scrutinizing and verifying claims made by business. And we need them to use their full agency as forceful stewards, doing the due diligence on the transition pathways and plans of businesses, how much capital expenditure and R&D investments are aligned with a net zero target, ensuring that all acquisitions are aligned with a net zero target. And importantly, and this is where we also need some regulatory intervention, ensuring that disposals of high carbon assets aren't simply offloaded to private markets where there is less scrutiny. And so we need to make sure that the company disposing of those assets retain oversight and responsibility for the transition or decommissioning of those disposed assets, because this discussion isn't solely about financial stability. It is also incredibly importantly about climate stability, as I think we've heard from the other contributors.
Mm-hmm. Thank you very much. Let me ask Werner Hoyer, if I may. First of all, what are you seeing in terms of the impact of the sustainable taxonomy? I know it's early days, but are you getting the sense that it could show results and become a model beyond Europe, or at least mobilize action beyond Europe? And what would be needed to drive this process of accountability and transparency even one step further?
Well, when I look at the polls that you have just shown here on screen, I must say I was very positively surprised. I'm not that optimistic, the polls are, because we have to be very, very vigilant. The temptations go with this instrument. So we have to be very, very clear. And we have to arrive at the appropriate instruments to, not only when it comes to accountability and transparency and reporting rules and all this, that goes without saying. No, we must also say, look at a country like the Maldives, for instance. They have contributed to the climate problem which we are living under with 0%. But they are hit the most. So when we address the climate change action, then we must make sure that we bring the best technologies to them in order to cope with the problem. And this is what always brings me back to the idea to say, think development, climate, and innovation together. I take the very big example, that's Africa. Africa will need to multiply its electricity production within the next 50 to 20 years by the factor of 4. Now, I have a couple of ideas which kind of energy technologies you might use to get this electricity produced. Or you go into there with the latest technology, some that is still in the institutes of our universities, and bring that technology there. I think we have the responsibility to do that. Otherwise, we will fail. And as a European, I say, we would be crazy not to do it, because this is one of the areas where the European unions are technologically leading. So let's take the opportunity. There is a responsibility and an opportunity at the same time. So all the transparency ingredients, like accountability, reporting, and so forth, that goes without saying. That is a must, but it's not enough.
Let me ask you one other question, because Mr. Srikant mentioned the need to incentivize investment in green financial initiatives. What could that mean, for example, for the EIB? What are possibilities for how to do that?
Well, at the end of the day, EIB, like colleagues in other institutions like this, are a bank. We lend money, and sometimes we horrify people by saying we lend you money, but we want the money back. And this is then totally a big surprise. Well, the trick is, of course, to combine the lending of an institution like EIB with the grants and the supports that member states of the European Union or the Union itself or others can give. And this link makes the difference. With grants alone, we will never reach the objectives. With lending alone, obviously, neither. So we must combine grants and loans, and in particular when it comes to targeting technology. For targeting latest technologies, developing latest technologies, we must say that this, for the private sector investors at the beginning, is too risky. This will not do the trick. The trick has to be done by bringing something into motion with the support of the member states of the Union, in our case, and its institution, the bank, but then let something develop that then becomes profitable for the entrepreneurs who want to participate in it. But this is a perfect link of state activity, of lending, and of technological development with industry. We need all the three elements.
Thank you very much. Mr. Srikant, did you have a reaction to the audience poll that we just saw? And beyond that, I have another question for you as well, but perhaps that one first.
No, that's a very logical thing. I think, in fact, 57% is too less. And when together, more likely it's 92. Because that is the key to ensure that there is no greenwashing and there is similar evaluation of the proposals across the investors.
Mm-hmm. You gave us a perspective very much from your point of view as a major utility. India is a big decentralized country. How could local funds and local investors be better tapped to match them? Werner Hoyer essentially was just talking about the need to match things when we're talking about financing. How could local bodies in your country better match up with capital to do things that are perhaps a little bit below the threshold of a big company like yours?
See, the Indian financial market is one. Despite we have a federal structure, but the market is one. There is a free flow of capital across the states. There is no barrier at all. There is all subject to the same regulation, same investors, and therefore, flow of capital, there is absolutely no issue. As far as the smaller issuers are concerned, if they have to tap this market, the capital markets, then size is one constraint. That at below the cost of tapping this market below a certain threshold becomes expensive. So that is one of the barriers. Otherwise, there is no difficulty for them to tap this market.
Thank you very much. I'd like to also ask you to talk, all of you, a little bit about cooperation. And I will, again, go back to Minister Schauner to talk about how you are cooperating both with neighboring countries and organizations, and beyond that, with international institutions. I know that you're banking on renewable project developers from India, among other places, and maybe you can tell us a little bit about that, and also about what else you're doing to trigger foreign direct investment.
We are a middle-income country, and like I said before, we announced to become a carbon neutral country just in 2019. And since then, we've had continuous flow of support and interest from our development partners, bilaterally as well as with MDBs as well, to enhance and develop our energy sector. And we've also received in both in grant form and in concessional loan as well to increase our capacity to invest renewable energy in the Maldives. I've heard some comments about just now about one of the challenges or one of the barriers is maybe the size of it. And that's actually one of the issues that we face in the Maldives. But I'd like to also challenge that small is beautiful as well, and use the Maldives as a testing ground to implement these and to take it to the next level. So one of our experiences is over the past years, we've had support from our development partners to enhance our energy sector, to develop and make our country investment ready. And I think we have reached that stage at the moment. So we want to continue to work with our international partners to increase international cooperation, which is fundamental to the Maldives and to develop our country as a whole as well. So achieving the country targets in the energy sector calls for continued support from international agencies. And I'd like to also note that one of the things that we have in the Maldives is that we have the political will, we have the investment environment right now, and we just need a little bit of hand-holding to take us to the next level. We are a small country, and the Maldives is so achievable to reach net zero by 2030. And for us to, as a whole, as a world, we can't afford to not reach this. So we call upon all countries to work together to reach these targets, because 2030 is not so far away. For us to keep global emissions below 1.5 is critical for our country's survival, for our country's development, and for our existence as well.
Thank you very much. Let me ask, with our unfortunately rather short remaining amount of time, but I would like to go to Vice Minister Hirose and also to Mr. Nazara and ask you to talk a little bit about the picture of financing when it comes to adaptability and resilience. And in that connection, perhaps also, I'll just briefly mention the commitments to the Green Climate Fund, which of course were supposed to be reached by 2020 and were not. Now supposedly will be reached by 2023. As you know, we're talking about $100 billion, often viewed as far too little to address the problem. The UN IPCC has said that adaptability is absolutely urgent and that we're far behind what's needed. So say a word to us, if you would, Vice Minister Hirose, from your point of view about what the best solutions are for financing climate resilience.
Yes, thank you very much. And I mean, Japan is committed to work with the Asian countries for paving the road for decarbonization, for climate neutrality. And we have a common goal as the top of the mountain, but there could be different pathways towards, getting to this goal. And Japan is working very closely with Asian countries to have a roadmap towards this goal. Given, that in the Asian countries, we expect, that the demand for electricity will increase by 2.5 times in the next 30 years, which is something that we definitely have to address. Now, at the same time, as I said, different countries in Asia have different circumstances, and the circumstances or conditions of the Asian countries to introduce renewable energy is different from, for example, from other continents in terms of solar or wind power. Where, for example, in the wind power, the oceans are not shallow, or in terms of mega solar, the flatland is mostly populated and so on. So there are many constraints. And in addition to that, as our Vice Minister from Indonesia mentioned, the Asian countries are still heavily dependent on coal. So we have to have a realistic transition from coal to other resources in order to match, the demand for electricity to grow. So that is, the kind of way of thinking where Japan has this initiative of the Asia Energy Transition Initiative, AT, which is to assist, the Asian countries to come up with a roadmap, realistic roadmap, take into account the different circumstances of different countries. And for example, it could, be, for example, with Indonesia. Indonesia might be interested in a co-furnace of ammonia with coal, or with geothermal power, or Thailand or Vietnam might be interested in more in solar energy and so on. So we are going to take into account different circumstances of different countries, and that's and we are going to do that by providing financing up to $10 billion in the next for specific projects. And also utilizing the results of our R&D to do demonstration projects in Asia, and doing capacity building, human capital development for using the decarbonization technologies. So that is, I think, and it is, I think, very important that with the Ukraine crisis, that energy security is an issue right now, so that we have to have a realistic way forward that keeping, the very high goal of decarbonization, but having a realistic pathway towards that, I think, and that is in the kind of way of thinking where Japan is on that. And in terms of the commitment, by the development for that, Japan has committed in Glasgow by our Prime Minister to have an additional $10 billion for the next 5 years, in addition to the $60 billion that we have committed in the past. And that was highly appreciated, I think, and we hope that by that, and together with the other developed countries, we can assist the developing countries for the transition.
Thank you very much. Vice Minister Nazara, talk to us a little bit also about the cooperation piece from your point of view, from Indonesia's point of view. What kind of cooperative initiatives are especially important for your country? And then also for you, a question about adaptation and what you see as crucial to addressing the vast investments that also need to be made to make infrastructure and more resilient in the face of change.
One of the roles that the government must really do is to compile the list of projects. At the end of the day, it's about the list of projects. Now, once the list of projects is there, it is very important to make sure there is as mentioned earlier, EIB will be going away from the coal-based or whatever that is, fossil, even maybe fossil-based project. So it's very important to have the list. Then the government must put together the platform, how the international money can come in. This is where the cooperation will be very useful. Right now, with the Asian Development Bank, we are putting together what I mentioned earlier, the energy transition mechanism. Now, on projects, there are a lot of things on adaptation, especially for countries like Indonesia, because we are a very fast country, a fast archipelago. Local wisdom is very important. It's about the local infrastructure, it's about the local handling, traditional ways of handling the garbage, solid waste, and so on. They are all maybe like pieces, like a small pieces, but they are all very important when you put them together in a country as big as Indonesia. Of course, at the end of the day, our biggest problem is the coal power plant. We have to think about the transition. Now, let me tell you, the last 2 years, we are all hit by the COVID. The demand of electricity going down. Yes, we are looking the recovery just next in the very near future, but a lot of countries at this moment are starting with the surplus in electricity. It is something that is the real problem. Then it is mixed with the local business climate. It's mixed with the local contract. It's mixed with the. I believe that in Indonesia, this is something that we have to make sure that the logic of renewable and green continue to be there, despite the fact we are starting with the surplus in electricity. We should not stop the discussion. Nevertheless, it is very important that we continue to cooperate. The government of Indonesia will continue with the SDG bonds. Will continue with the green financing, and we would like to make sure that it continues. It's not going to stop. We are doing our best to make sure the fossil-based subsidy going to decline. It's very hard at this time of the day. It's very hard, but I think 3 to 5 years ahead of us, it should be back to the normal.
Very briefly, Werner Hoyer, if I hear that, it strikes me, your announcement that you would get out of fossil fuel financing, has that made an impact? And is there a way to work with borrowers to nudge them? Or would you say there's plenty of other financiers out there who are willing to keep financing fossil fuels, so not a lot of leverage?
No, not at all. I mean, what I see is that the money is lying on the streets for clean energies and projects in that context. I remember the Davos meeting when we were still able to travel to Davos in winter, when I saw a representative of a very, very important Swiss bank there. They said, "What are you doing here at a round table on clean energy?" And they said, "Well, this is what my investors expect from me. This is going to be the name of the game." So I think the financing of these big projects is possible. I, for instance, believe that we will not achieve our objectives without a higher reliance on hydrogen. But green hydrogen, in order to have hydrogen green, you need to have huge electrolysis capacities, and we need to establish them without recourse to coal again. So these are the big challenges, in particular in Africa and Latin America. In Asia, I'm not so familiar, but probably it's not different. We have to come to solutions to that quickly. And we have the technologies, and I said, we also have the investors. If we have convincing projects, we can do it.
That's the public capital side. Just one word from you, if you would. I mentioned the Green Climate Fund. There's certainly a perception, I think, on the part of some developing and emerging countries that the rich countries prefer to concentrate on mitigation, and that when it comes to anteing up for adaptation, we're a lot slower to meet the challenge.
I can only say that allegation is totally correct.
Anybody want to challenge it?
I believe so as well.
Yeah. Hard work to be done at COP27, in other words.
Absolutely.
Thank you so much to all of you for being with us here for this panel. It's been a very, very interesting exchange. Also to our remote guests, thanks so much for joining us. We really appreciate your taking the time, Minister Schauner and Ms. Thomas.